Hey yo, what's good guys? Welcome back to the channel of finance. You already know it's your boy. Let's to the EGO.
I've noticed that a lot of people like to go on Google to search for the best trading strategy, but end up finding endless of trading strategies that are just not working out for them. I know because I've been there 4 years back when I started trading, and let me tell you one thing, it sucks. But you're lucky though, because you ran into this video, which eventually will lead you to my YouTube channel, where you'll find videos just like this one, of which you'll get to learn how to trade literally for free. Now, before we get further into this video, please do me and yourself a favor by hitting that subscribe button and obviously turning on the post notification bell so you can be notified whenever I drop a new video. Now, guys, this video, guys, I'm gonna show you the strategy of which I'm using, of which is made up of three important components. The first one being the market structure, the second one being the third touch rule, and the third one being candlestick confirmation. Now, guys, with these three important components, you can have yourself the most profitable strategy and make a living out of the strategy, right? So we're gonna start with a market structure. For those who doesn't know what a market structure is the direction of which price is moving within, right? And we have three types of market structure, hence you can see here on the screen. Our first one being an uptrend market structure. Let me just write that down. Uptrend. Yeah, I'm just gonna write uptrend. Our first one being uptrend market structure, of which is made up of a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and it's trending up. Hence why we call it an uptrend market structure. Our second one, guys, is the opposite of the uptrend market structure, of which is a downtrend market structure. Now, a downtrend market structure is made of a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and it's trending down. Hence why we call it a downtrend market structure. And obviously, our third one will be our ranging market structure, of which price isn't trending up or down, it's just moving sideways, consolidating between two levels. Now, we're not going to focus on the ranging market structure because I don't usually trade in that type of structure, right? I always look forward to trade an uptrend and a downtrend. Now, guys, with the second one, the third touch rule, guys, it comes in play once obviously in an uptrend you have your third higher low, right? Now you can see you have your first higher low, you have your second higher low. Your second higher low confirms the trend, hence why I drew this trend line, right? So once you have two touches of the trend line, guys, your trend is confirmed. You are confirmed that you are in an uptrend, right? On your third touch, guys, of your trend line, of which will be your third higher low, that's when you look for entries. Obviously, after you get your candlestick confirmation, guys, of which is something we're gonna talk about too. So same thing with the downtrend, guys. Your second lower high confirms your trend, guys. And your third lower high, guys, that's when you start looking for entry points to go to the downside, right? So let me go live example with the chart, guys, so I can be able to show you what it is that I'm talking about. So, guys, looking at the market currently, we're just gonna start with the downtrend, seeing that here price is trending down in a way, right? So the first thing that you wanna do in your chart is obviously identify your market structure. Here you can see that we have a high, and obviously now we have a lower low, and we have a lower high, and we have a lower low, and we have a lower high. So what does this tell us, guys? This tells us that obviously price is trending down. And what are we gonna do about that? We're gonna try to connect our trend line to see if we can get any entries. So we have our first touch right over here. Second touch, remember what I told you guys, the second touch always confirms your trend. Third touch is where you start looking for entry points, obviously, after you get your candlestick confirmation. Now, guys, there are types of candlestick of which you're looking for, which is engulfing bar candlesticks. And I'm just going to show you an engulfing bar candlestick right over here. You see this candlestick, guys? This is an engulfing bar candlestick. This is a bearish engulfing bar candlestick. Why do we say it's an engulfing bar candlestick? Because you can see this candlestick right over here engulfed this candlestick. Hence why we call it an engulfing bar candlestick. Same thing with the bullish engulfing candlestick. Just gonna find one for you so you can be able to see, right? Nice. Here's a bullish engulfing, opposite of a bearish engulfing, guys. You can see here, nice bullish engulfing candlestick, because this candlestick engulfed the previous candlestick, hence why we call it an engulfing bar candlestick. And obviously, guys, we have other candlesticks such as the inside bar, guys. The inside bar, instead of price engulfing the previous candlestick, it closes within the previous candlestick. Hence, you can see here we have a bearish inside bar candlestick, right? Which is also a candlestick confirmation that we are looking for. Same thing with the bullish engulf inside bar candlestick. You can see here we have the same candlestick. This candlestick is inside this candlestick, hence why we call it an inside bar candlestick. You see, guys, like pretty much simple. So back to market structure and how we're gonna find our entries. So guys, seeing that we have our first touch here, second touch, on our third touch, guys, obviously we wait for our the market to respect the trend line and close below the trend line. After it does that, guys, that's when we start looking for reversal candlestick confirmation, of which we got here. You can see we have a nice inside bar candlestick, and this is where we would have caught our entry points, guys. This is where we would have caught our entries to move all the way to the downside with it, right? Obviously, initially our take profit would be on our previous low, but then you can see that price here had other plans, hence it reversed, right? But then looking at it, guys, you still would have made a lot of money. 30% is a lot of money with this trade, right? So yeah, man, this is a live example, guys. You obviously first have to identify your market structure, guys. After doing so, obviously that's when now you start looking for other confluences that you can use to kill the market on a daily basis. So yeah, guys, let me find another example for you guys, of which will be a bullish one, right? I'm looking for a bullish example right now for you. Okay, yeah, I think I found one, sir. So yeah, man, in this case, guys, you can see that price is trending up. Obviously, what you want to do is identify your higher highs and higher lows. You can see here we had a low, then we had our higher high, we had our higher low, we had our higher high, then we had our higher low, and obviously price went all the way up, printing another higher high. But then we're gonna focus on this. Obviously, after doing that, what are you gonna do? You're gonna try to connect your trend lines, guys. Remember, the second touch confirms your trend. Third touch, that's when you start looking for entry points. So let's see what happened, guys. We had our first touch here. We had our second touch. Okay, this seems to be a second touch and this seems to be a third touch. So let's just focus on here. Okay, no. Yeah. This is our first touch. This is our second touch. Now we had our third touch. Notice what happened on our third touch, guys. Price gave us a reversal candlestick, which is an inside bar candlestick. I told you about this candlestick, guys. I told you about this candlestick, right? An inside bar candlestick, right? Why do we say that? Because this candlestick, this small candlestick is inside this long candlestick. Hence why we call it an inside bar candlestick. And this is where we would have actually caught our buy entries to move all the way to the upside with it. Obviously, having our take profit all the way to the upside, of which you can see was smashed, guys. But then before it did, that price came again, gave us a fourth touch of the trend line. Notice what happened on the fourth touch of the trend line. Let me just remove this. You can see, guys, we had a nice bullish engulfing candlestick, of which I talked about. It's a reversal candlestick too, which we would have caught entries just in case you missed the third touch entries. You could have caught your entries right over there, having your stop loss below, and obviously TP all the way to the upside. You see, guys, like simple. You can even do your own back test with this strategy, but it's the easiest strategy, of which you can use, guys, to obviously be a profitable trader and make profits. And obviously, once you start making profits with this strategy, you then will decide whether or not this strategy is the best trading strategy for you, or it's just one of those strategies. But then one thing I'm sure about, it is a profitable trading strategy. So guys, currently I was looking at NES 100, and obviously I sent a signal, but then this is a whole different strategy, right? This is a breakout trading strategy. You can see here price was trending down, Then it gave us a breakout, and obviously after the breakout gave us a retest and a nice inside bar candlestick, of which we would have caught our entries right over here, but then I was still asleep and I missed those trades, and obviously I had to wait for price to break this level right over here. And obviously, hence you can see it resisted, broke, supported, and then gave us a fake out, and then gave us this nice bullish engulfing candlestick. And obviously I caught trades somewhere around here with my stop loss being there, TP all the way to the upside, and hence you can see had a nice 30% risk to reward ratio. So yeah, man, if you found this video useful and you enjoyed this video, please guys give me those thumbs up. Let's take those likes at least to 50 likes, guys, and don't forget to subscribe, turn on the post notification bell, and just let me know what you think about this video in the comment section, guys. Otherwise, till the next video. Yes, sir.